Good day, everyone. Well, the unemployment report came in strong on hiring, but unemployment rose to 3.7% versus estimates of 3.5%, driven largely by the uptick in the labor force participation rate, and that rose from 62.4 to from 62 rose to 62.4% from 62.1%. And wage growth also jumped 5.2%, but that was not even close to keeping up with CPI inflation, which stands around 8.5%. Now, some interpreted the report as weak due to the rising unemployment. So that temporarily reduced the odds of a 75 basis point rate hike when the Fed meets later this month. But the general market, and I think general consensus, is that the Fed's got its work cut out for it in terms of bringing down inflation. So ultimately, markets rallied, then sold off, rallied, then sold off again. And this kind of volatile market is not unexpected. And the downtrend remains intact, but the markets are down quite extensively from the time they rolled over a couple weeks ago. And markets do bounce. If you look at the prior drop we had from late March into say May, you'll notice that there were a couple times where we did have some nice little 3-day bounces. And perhaps the market's due for one now. NASDAQ's been just down, down, down. And also the question is, do we have any news on the docket that could catalyze the market in either direction? Well, not really. I mean, we've got the unemployment, the jobless claims report on Thursday, and that's a weekly sort of thing. It's been showing that it's upticking, but it tends to come in under estimates. Kind of not a big deal. It's a weekly report, so I don't think that's going to move markets particularly. But then we do have the CPI report is coming on Tuesday, and there is speculation that because commodities had gone up so much and housing had gone so much, that there's going to be some backing and filling on these prices, so that perhaps the CPI comes in at or under expectations. That would still be a very high CPI number ultimately, and that might push the Fed into, say, hiking only in quotes, by 50 basis points when they meet later this month instead of 75. Right now, I think the last I looked, the CME Fed futures was pricing in something like an 82% chance of a 75 basis point rate hike. But that would certainly drop if the CPI is friendly on Tuesday. But that's a few days away. We're on Wednesday now, and no better time than for a bounce, I suppose. Some sort of and the Fed, actually, there are some Fed members that are going to be speaking, and they all tend to be hawkish. So, well, we'll see what happens. Now, much debate has taken place, obviously, over the level of rate hikes in the coming months. And Powell has said it's going to be data dependent. And he made it clear that he's going to continue to hike until he breaks the back of inflation. And that, even if that means lower markets, so be it. So if he hikes beyond an FFR of 3.5%, I don't think markets really will stand for much more of that. I think we're already in a downtrend, and that downtrend could accelerate. It's just, I think it comes down to the CPI and PPI numbers, because he did say this is data dependent. So if we get smaller rate hikes going forward, say a 50 and 2 25s instead of where it stands now, which is a 75, a 50, and a 25 by the end of the year, then markets could rally, they could bounce, maybe they go sideways. And ultimately, though, we are going to see QE5. It's just a matter of when that's going to be. For Powell to pull a Volcker, we don't have the room for him to do that. Even as bad as the late 70s were, Volcker started hiking and interest rates were far higher and debt was far lower. So Volcker had more headroom to hike as aggressively as he did. We can't do that today. And Powell is a politician surrounded by powerful people. So these people have ample holdings in stocks, bonds, real estate, and other assets. I don't see him crashing the markets. He's going to find a reason to halt the rate hikes. Maybe a new crisis emerges, and that allows him to justify even the launch of QE5. The saying goes, we don't know what we don't know, and a black swan could surface given the higher order effects from the COVID lockdowns and quarantines, which crippled supply chains, as well as from government regulatory overreach, which prevents small businesses from getting off the ground. And small businesses, as O'Neill always used to say, and still says, are the lifeblood of an economy, and that's where the cutting edge ideas are often realized. So at any rate, QE5 would be a huge buy signal, but I think that's quite a ways off, and it would launch the next crypto bull market, enabling leading companies to continue their path of exponential growth, while new and innovative companies would join the fray. Indeed, the current $1 trillion market value of the crypto space will inevitably grow into the tens of trillions. And while some naysayers talk about crypto being over due to the $2 trillion in market cap evaporating into thin air, that's typical of crypto space. When it was just in the billions, the crypto space had valuation corrections beyond 90% multiple times since 2010. But it is easy fodder for mainstream media to create FUD about 2 trillion up in smoke. And of course, that's a huge number, and that does impact a lot of people. So I'm not saying that's not a much bigger deal than prior corrections. But crypto's tendency is to have these massive corrections during bears, especially today, where the macro environment's the worst it's been in the lifetime of cryptocurrencies. So I expect more bloodshed ahead, and I wouldn't be surprised to see the crypto space valuations drop in half once again. I mean, down to 500 billion. That would be a Bitcoin of, say, 11,000, and maybe that's the major low. But it really comes down to how aggressive Powell's going to be in terms of his rate hikes. I mean, if he's going to do what he has said, these target rates, getting inflation down to 2% and continuing to hike to break the back of inflation, I mean, he's going to have to get the FFR, that's the Fed funds rate, up into the 4, 5, 6%. I don't see that happening, and if it does, you can expect the S&P to be down 75% or more off its peak. So I think the current bear, at any rate, gets worse before it gets better, and ultimately the building of cutting-edge technologies has not slowed at all. Web3, blockchain, AI continue to grow at a fast clip, and top minds just don't care about the price of Bitcoin or the valuation of the crypto space. They simply see solutions that carry deeply evolutionary consequences as they disrupt inferior legacy systems. Gil, how are you seeing everything?
I think we've been down 7 days in a row on the NASDAQ, and you're due for some kind of a bounce. I thought it was interesting today. I like to monitor the cable financial TV channels, as you all know, mainly to get a sense of where the sentiment is. Because you have these people, they're mostly permabulls, and when they start telling you that they're either concerned, or even better, if they're starting to go short themselves after telling everybody that everything was a buy on the way down, there are plenty of opportunities, and you got to take advantage of cheaper prices and quality stocks at bargain prices. Now they want to go short. So I saw that today, and after 7 days down, I got to say it's feeling pretty piggy on the short side. So is Chris. We were talking about this before the webinar. We both went to cash over the past, I went to cash this morning when we turned off the lows after the open, and Chris went to cash in his crypto shorts a couple days ago. But basically, we're back in cash and watching to see how this develops. And so we'll see. I think, though, how far could you go? You could go for 2 or 3 days. So I wouldn't necessarily want to jump on the short side. We put out a report. We put some names out, discussed some themes, rather, over the weekend in the Focus List review. And I sent out another piece yesterday clarifying things or making some points about what happened yesterday. And there were some short sale entry triggers in several of the names that we showed. And these patterns are very typical for a lot of names, and I'm going to show you some of that in this webinar. But those are the patterns we're watching right now. So we want to see where these lead. And I think it's better to be prepared than trying to hit things at the moment of impact. I would tell any of you out there who have no experience short selling and think that you're going to somehow make a mint just following our reports without having any understanding of how it's done. But basically, we're showing you our setups or potential setups where stocks are either in position or could come into position depending on what they do going forward. So if you don't know how to handle the short side and handle that sort of stuff, don't rely on us for some sort of real-time do this, do that. You know, eat. Simon says eat. Simon says sleep. Simon says, you know what? Anyways, you know, that sort of thing is, well, we're not really oriented that way towards this amateurish approach where people want to be told what to do. We'll identify setups that we like. For example, we haven't liked anything on the long side for a long time, and we've had nothing on the focus list for a long time, and that's for a reason. And then we tried one name, which was Camco, on the long side as a pocket pivot, and actually it shook out and has gone to higher highs. So thematically that was correct, but technically it was not ready at the time. So, but yeah, that's the way this market rolls. You get a nice shakeout and then off to new highs. I don't know if it's going to double top, but the pullback into the 10-day line looks okay. So these names that we discussed, or that we showed, and basically we showed them as examples of the sorts of things that we're looking for. So essentially right side failures, okay? So when you see a pattern like this, usually if you start a new bear market leg down, you will see some failures like this, something like this. You can go back and look at First Solar it was also a late stage base failure as well as a punch bowl of death. It had a very long handle on the punch bowl, however, back in 2008. And other ones, you know, like I've shown Ariba many times before. But you can see this one is in a breakout position. It's a little bit double toppy, coming straight up off the lows, but nice and steady. And if it fails here, then we would want to short it. But obviously it's not doing that yet because it has not busted the 10-day line or the 20-day line after that. Chesapeake Energy has busted the 20-day line. Now you can see how this is a double top, okay? And this is a basic pattern that we use now. And what's very, I find interesting these days is that that's a pattern that I never really used before until now, but I've realized a double top is just a corollary to a late stage failed base. It's a different type of late stage failed base, just like a punch bowl of death is a different type of a late stage failed base, or at least a failed base, if you want to argue whether it's a late stage base or not. Some people get into base counts. They want to call the punch bowl a first stage base. Like, okay, good luck with that. That won't get you anywhere because it generally turns out to be shortable. In any case, double tops have been some of my favorite patterns to short into. And basically, the left side peak is used. If it pushes above, when it pushes back below, that triggers a short sell entry. And then you can use either the line, the point of entry as your selling guide, or you can add 1 to 3% for upside ferocity if you want. But it's not a perfect process, okay? You may have to work the short sale entry 2 or 3 times before it actually catches. The key is not getting your head ripped off with a big loss 2 or 3 times, okay? So you want to run things very tightly. And that's why I say you need to be a skilled short seller. And I should have finished my point actually before. And if you haven't, you should have read Short Selling with the O'Neill Disciples. But on top of that, like I was saying, we never discussed the double top pattern in that book or any of the other books I've written on short selling. And so, you know, you've got this situation where we have a new type of market where you have these very sharp rallies. Double tops are very common. So this one now has busted the 10 and the 20, but notice it's very choppy in here. You know, so if you think you're just going to get short and it's going into oblivion, that's not necessarily going to happen. Okay, so you have to be open to that possibility. But it does break down, and I'll work these things. You know, you get a little undercut and rally here, and then it bounces in the 10-day line, and it'll do this for a little while. Now we're pushing into the 20-day line. The question now is, does it become shortable here? Perhaps, if the market rolls over, but it looks like it wants to push higher. So the line of least resistance for a lot of these could be to the upside, so you don't really, I think it's better to lay back and let things play out, especially with people on Fox Business News now wanting to get short. You know, the permabulls. Chris and I were talking about this. Back when I used to go on, there was this guy that was on always opposite me, and he's a permabull. You know, every sell-off is a buying opportunity, bargain, quality stocks at bargain prices, all that stuff, and now he's all wanting to get short. It's like, okay, and you're starting to hear other people wanting to get short. So like I was saying earlier, yeah, when you start hearing that, that's probably telling you you're going to at least maybe bounce around for a little while. So maybe that's what these do. Maybe they just bounce around, but they'll set up somewhere in here. So that's one of them. What were the other ones I had on there, Chris? I'm trying to remember. Well, first solar. Okay, that one has not triggered anything. That could be a potential pod. And look at this move straight up. Huge move, but it's still going. So it could just continue higher. And I'm actually long this thing this morning for now. We'll see how this plays out. But it could just be a day trade. Maybe it just keeps making new highs. And I'm counting on the fact that that's probably the last thing anybody expects. But I think that eventually at some point, if we get another sharp move to the downside, this could fail here. So maybe it fails today. Who knows? If I got stopped out at the 10-day line, I would just flip short. Anyways.
Yeah, we had follow-ups on 8 names. So it's ALB, BJ, ELH.
Hold on, wait a minute. Let me go through them, and then you can tell me what they are. So here's Albemarle. Okay, now this is a double top failure. So there we go. But notice how it's a little choppy in here. So it's not like it's all that easy. All right. And then what happens here is you break down. Okay, so once you're down 1, 2, 3, 4, 5 days, you're extended to the downside. You certainly would not be jumping on this short here right at the 20-day line thinking that it's going to just break a lot further. And it didn't really go any further than that didn't even get to the 50-day line or the 10-week line, surprisingly. So now you're back above the 20-day line. So this might put it in a shortable position if it reverses back below the 20-day line. But I wouldn't necessarily bet on that. Maybe it just pops back up to the 10-day line because you need the market moving with you. You need the river. You need the tide. You need it flowing with you. And then short selling feels very easy. Okay, so we also had, Celsius Holdings. Okay, this one actually kissed the 10-week line this morning. I don't know if you saw that. I use this as a reference also for a cover point. So it was shortable along the 20-day line. So in here, I'll cover and look for a rally to the 20-day line to get back in. Okay, we'll see if that actually works, but it may just hover here and then bust the 50-day line. I don't know, but this is a classic punch bowl of death. Reminds me a lot of Ariba back in summer of 2000. Okay, where are we? What were the other ones? Okay, Celsius. Then we had, where were the other ones? I'm sorry, which one?
California Resource Corp, CRC, and then CTVA. Corteva.
Okay, yeah, so look at this one. This is another double top, okay? But notice by the time it gets to the 50-day line today, it's extended. So unless you shorted it at the 20-day line, you're late. But now that you've hit the 50-day line, you want to watch a rally back up to the 20-day line. Unless, of course, it completely busts the 50-day line and the 200 and triggers another short sell entry at that point, which is possible. So you never know. Anyways. But that's basically how that works out. You get a very nice move to the downside. What is that? From about 50, the left side peak here is around 50, say, down to 44. And what is that? That's 6 points. That's 15% on the downside. And you would generally want to take something like that, 15 to 20%. If you really get lucky, 25 to 30 if something blows apart. And then you wait for the bounce and you try to short into it. So there's nothing here necessarily to jump on just because we sent out a report either over the weekend and talked about them. Although some of these were actually breaking support at that time because that was 3 days ago, would have been last Friday. So on Kacher Energy, it was actually just starting to trigger at the 20-day line, and then it was shortable at the 20-day line yesterday. Okay, but now it goes down to the 50-day line, finds support, and now it's bouncing. So now what we would look for is a potential move back up to the 20-day line as a short sale entry there if we have the market tide flowing with us. Okay, that's a very important concept. Okay, and you will find that short selling is a lot easier when it's going when the market's going down. And over the last 7 days, Nasdaq's been down 7 days in a row. It's been a very piggy 7 days. I can pick up 20-30% in a hurry. Anyways, what else? Katerra. What else, Chris? Did I cover them all yet?
Corteva, CTVA, On Semiconductor.
On, yeah.
There's another one.
I think that's it. We also looked at the fertilizers, but I can remember those. Okay, so here we have O&M. Now, this is an interesting formation because I'm just going to make it easier to see because you do have a double top setup here in force right now. So you did have a trigger last week, okay? So we're a little late on that one. But once they fail, of course, now it's a late stage failed base potentially. The 20-day line or the 10-day line can serve as overhead resistance. Go check out Celsius Holdings, right? It did nearly the same thing around the 100 level, but I'm not really comparing the two patterns per se, but you can see how once it broke the 10-day, it bopped around in there a little bit. And if you look at ON, you got the same thing going on. Maybe I should make these a little bigger. So a rally now up into the 20-day line would be shortable. It was shortable last Friday at the 10-day line, but that was also where it broke the left side peak up here. And so if you get rallies up towards that breakout point or the 20-day line, that might be shortable, okay? But the thing is, you're now stalking these, okay? You're not waiting for us to put out an email and then you're just going to jump on something because you saw us put out an email. You have to put some thought into it, some thought into your entry based on what you know about short selling. If you know nothing, then don't bother. Otherwise, you're going to get your head ripped off. It's also, I think, kind of lazy to think you're going to just follow our alerts. You need to develop understanding of the short side. It's very complicated, it's very volatile, and it's very tricky. So I can tell you flat out, I don't lose much money on the long side when I'm long, but the biggest losses I've ever taken have been on the short side. Of course, some of the biggest and fastest gains I've ever had have occurred on the short side as well. So, you know, live by the sword, die by the sword. And if you don't understand that and you try and do this in a manner that is, you know, kind of like plunger like the way I would do it, you're in for trouble. If you are starting out, I would suggest starting out very small. In any case, you can see ON is just this big, multiple tops in this pattern, very jagged, very sloppy base. You see no real tight areas, right? But it is holding here along the 10-week line as well. So that's another reference point if it busts that line. But in this position, okay, it makes sense for it to stop in midair because it's really finding support at the 10-week line. So in here, like I said, we're looking for rallies into the 10 and 20. Now, CF Industries, a fertilizer name, you'll see the double top again at play. And so what's going on here is you now have a right side failure, base failure, breakup failure, whatever you want to call it, punch bowl failure. These are now in process. Okay, so now we have to watch these to see what happens from here. Because they will work and spend some time after the initial break. They could bop back and forth before breaking lower, if in fact that's what they do. But in this position, you definitely don't want to be shorting it. If you're watching this yesterday, and we did talk about it, well, I guess I didn't talk about it till yesterday. If you're watching this yesterday, it flipped out at the 10-day line. And I do watch this name because all of these were breaking out, and they're on my leaders list right now, which I'll get to that in a second. But you can see this is short near the 10-day line. Now you're near these lows. Let's see, it's finding support near the 10-week line here. So we'll see how this plays out. But at this stage, you got rallies to the 10 or the 20 as your short sale entry spots. Then you have other names in the group that mimic CF, but which haven't broken out, like this one, finding support at the 200-day line, Mosaic. So again, where's near-term resistance at the 20-day line? Nutrien. Similar situation, it didn't break out, but now you have resistance at the 20-day line. If this rally, if we get a reaction rally here of some, import here, then, the 10-day line could become your area to watch. So that's what you want to be watching for. So you got all these names on your watch list. You can probably look around and find some others. And as you know, I tweeted this, I think over the weekend. People always ask me, how do you screen for shorts? How do you say, well, you don't screen for shorts. Haven't you read my books? That's always the first sign that they haven't read either of the books on short selling. Because what does those books tell you? You focus on the leading stocks from the immediately prior bull cycle. So those would be the leaders. And that's why these days I don't maintain a buy watch list. I maintain a leaders list because those are the stocks that are leading currently. Whether you want to believe the rallies or not, that's what they're doing. And so they make it onto my leaders list. This has been my current leaders list as of 2 or 3 weeks ago. And so my leaders list suddenly becomes my short sale watch list because we focus on the leaders from the immediate prior bull cycle. Or if we're in a bear market rally, what stocks are near their 52-week highs and in potential positions for double top breakdowns, such as CF Industries, for example. So, but anyways, let's just take a look at this list here. So you have Excelis is interesting because this is kind of a punchy bull type of pattern. I don't know if it necessarily makes it. It may just barely hit 50%. Maybe it's like 47, 48. But you can see that's a nice punch bowl pattern or punch bowl-like pattern, basically a deep cup, and the move is not sustainable. And then you bust and you break the 20-day, and now you're busting the 50-day and you're living below it. So, you know, that was a nice short if you were watching it. And it was on my leaders list. And guess what? It busted after it did that little breakout from a short handle. So one-day wonder move. And I've talked about those a lot. You see them a lot in this market where you have this big volume move for one day and then that's it. But that was a leader at that point, right? BJ's wholesale's in here. And, of course, that is a leader for now. Blue Core was a leader. Let's see if I can. Let me just make things a little bit bigger. But you can see here that it's something of a breakout failure as well. So you can see you broke out through this left side peak here, and now you've rallied back up into it in the 10-day line today, and that made it shortable. So there's CRC. We talked about that. Camco, again, is a leader, and it's holding up pretty well. Believe it or not, I actually made some quick money shorting this morning, and then it kind of found its feet. I'm glad I shorted it because that little gain would have turned into a loss. But you could tell it's holding support at the 10-day line. But it's in a double top position potentially, but it's holding that for now. Also, thematically, this is very strong. I think if we were in a roaring bull market, I would want to be long this stock, period, and probably big. Canadian Solar is another one hanging in there. If we look at this pattern, that's I think it's actually a long-term kind of, yeah, but you can really see over the last several years it hasn't done anything. But it is a leader right now. It's holding up there. Catalyst Pharmaceuticals, same thing. You've got a pocket pivot, a 5-day pocket pivot, potentially today coming on the heels of yesterday's 5-day pocket pivot. Here's Celsius Holdings. It has been a leader until the last couple of weeks. CF Industries, same thing. Chesapeake Energy, same thing. Commercial Metals was, but notice how it played out as a double top. And then you bust the 20-day line over here 6 days ago, and now you're down bouncing along the 50-day line, which if I had shorted at the 20-day line, which would be the proper entry, unless you're smart enough and lucky enough to catch it at the 10-day line, then you're covering there and then waiting to see what happens. So we can just go through most of these. You can see, you know, they're in positions where they could fill. Corteva finding its feet today. That's not unusual, but it's a double top type of short. It was just barely missed getting back to these left side peaks, but it did break, and once it busted the 10-day line, could have been used as an aggressive short sale entry, and that has been a resistance ever since. Now here you are today pushing right back into it. Your volume levels are running minus 42% below average. Does that become shortable? I guess we'll find out. But this market right now, it's just, to me, it feels like it has too much momentum. And like I said, I am long, but maybe 40% long, so it's not like I'm, 400% long, which would probably be a big mistake. I don't know. Well, probably since I didn't do that, it probably is would have worked out really well. Here's end phase. Now, again, this is running into resistance along the highs of this current base. Now, it's a possible punch bowl type situation. You have a 50% plus deep cup. It's trying to break out, but it keeps running into resistance along the 300 level. So that's actually been a short there, but we'll see what happens here. Extreme Networks was a leader until last week, and now it's failed. Now you're underneath the 20-day line. That becomes a short sale entry point. I think I might like the 10-day, though, given the way this market seems to be acting right now. And you can feel it. You can feel the lift. And I'll show you why this all makes sense in a second, but as soon as I finish here. But First Solar, so that's one I'm long, but a lot of nice blue color. Yeah, I'd like it to be a double top, but it's not, okay? So I don't live in a state of denial. If something acts a certain way, then I treat it like it's acting until it no longer acts that way. Then I treat it like it's acting in whatever new way it acts. Here's Iridium. They got some big contract yesterday, so they break out, but it's a one-day wonder trade. However, if the market continues higher, watch this for a possible support. It may turn and go higher. There will be some things to play long if we get into a 2, 3, 4-day bounce if you're a swing trader. Lithium stocks have been strong, so now you have this as a potential double toppy type of situation, but not quite. Sort of here, I guess this left side peak here, if you wanted to pick a high, but you do have this one way up here. Now you're pulling into the 200-day line. So from a trading perspective, does that become viable? It very well may. McDonald's is a late-stage failed base. It's trying to push back above the 20-day line. Montauk Renewables just hanging in there. Give me 1 second here. Northrop Grumman, that's holding tight right along the 10 and the 20. Here's ON. I talked about that. Peabody Energy kind of looking a little funky here, but trying to find support down here. I think it'd probably be shortable along the 10-day line, but some of these are holding up better than others. Rambus was a short last week. Sigma Lithium. This is an interesting lithium name. It's a thinner one, but it's hanging in here along the 10 and 20. I don't know if this makes it shortable here at the 10-day line. Vertex, that was a short at the $300 century mark, and so it has busted the 50-day line. It's trying to hold along that black 65-day exponential, but there's nothing really going on there. So you get some sense of what's going on here, and there are some names to watch for trades on the long side if you want. So what's somebody's asking me? Are you generally shorting on things that are highly correlated with the index, or do you also short on things that diverge from the market movement? I short anything that's in a shortable position. And read my books. Read the books on short selling, so you don't have to ask a lot of pointless questions. Like I have to think about, oh, does this stock correlate to the market? Hey, sometimes if they're going down, they don't correlate to the market. So you focus on the setup. Watching for UNR, USO, watching for dollar reversal, fake out, breakout. Okay, USO, that's what you're talking about there, Chris? Possibly. I mean, I think, yeah, it looks like a little, I don't know, maybe it's an exhaustion. That's a possibility, I guess. Anyways, so let's go. I mean, some other things I'm looking at here. Right now, you've got the National Association of Active Investment Managers exposure index is at 32.36. So they all went running over to the middle of the boat, actually got on the bullish side a couple of weeks ago. They were greater than 70% weighting on the long side, or long exposure, I should say, net long exposure. Now they're down to 32.36% net long exposure. And if we look at stuff like, let's go, AAII bears are already pushing back above 50. That didn't take long, did it? And we look at the bulls, and they're down below 20, down to 2190, near getting down to their, getting very close to their 2020 lows. So still got a ways to go. So, you know, sentiment-wise, you're in a position where you could continue rallying. And I think it's kind of just kind of that way right now. And so, but I think, you know, I basically outlined what I'm looking at. You'll notice there aren't a lot of stocks triggering shorts today. And most of the short sale entry triggers you saw on yesterday and on Friday. And then a whole bunch before that. And so we've been working on Celsius Holdings as our primary and major, I guess, our major short sale idea. I don't know, is that the right word to use? Our primary short sale idea, because it is a punch bowl of death. And I think, I mean, that's how it is right now. That's what I would define it as. It could break that if it turns around and goes back to new highs. But I don't know if I'd bank on that on the long side, but you could get a rally up to the 20-day line. So that one's working pretty well. We came out with that when it was above the breakout point here. So a typical, you know, big move here on big volume, and then it rolls over. So anyways, that's pretty much the scene right now. We'll see how long this rally lasts. If it doesn't last long, that's going to tell you just how weak this market is. I mean, I don't see anything triggering at me on the short side here. It's possible that we might see something later in the day, but I don't know. I think we could rally for 2 or 3 days. So anyways, that's it for now. Chris, you got anything else? Any other questions before we wrap it up?
I'm good over here.
All right, so that's where we're at right now. So watch the rally, watch these stocks, go through your own watch list and look for similar setups like the ones that I just went through. Double top failures, late stage failed bases, possible punch bowls, which are another type of double top failure and late stage failed base that turn into punch bowls of death. So we'll see how this goes. But I think for now, you know, I'm small long, and we'll just see how this plays out. I'm not expecting too much, which maybe that means I'll get a lot. Who knows? Anyways, oh, one last question, Gush. Well, Gush is a long ETF for oil, right? Or oil stock. So, you know, go for that one. That could be a good one in here. Sure. All right. But I don't know. But yeah, you could use a 50-day line as your selling guide. So maybe they're all going to turn them. So ENPH, I already talked about ENPH. But it's trading at what right now? 302.24, so it hasn't really failed at the line yet. Anyways, all right, you guys, thanks for showing up. We'll catch you next week. And next week, it's a big week, I think. When do you have the Fed meeting, Chris?
Tuesday. Not the Fed meeting, but the CPI is on Tuesday,
Yeah.
and then the Fed meeting.
The week after?
Usually it concludes on Wednesday. I think it's the week after. Yeah.
Okay.
I think it's 2 weeks from today. But people should verify that.
Yeah. Okay. Sounds good. Anyways, we'll talk to you guys later. Have a great rest of your week. Take care.
So long, everyone.